Hello, welcome to the closing beat, everybody. Happy Monday to you. How you doing out there? Hope all is good. Hope you had a good weekend. We had a great weekend over in Texas, jumping around different areas of Texas. Got to meet a lot of cool people, a lot of viewers, a lot of clients, all that stuff. That was a good time. So thanks for hanging out with us before and after the shows and even at the shows. Had a couple clients join us at the show. So that's pretty sweet. We'll be in Atlanta on Saturday. If you want to hang out, of course, let us know. We'll be at well, I don't know. We'll be in downtown Atlanta. There's a stadium there. I think the Braves play there, but we will be there all Saturday, so you're welcome to come join us if you'd like. Let us know. Wine of Wealth for Eric last week was on some of the geeky stuff, things that you don't think about, so be sure to check that out if you're one of our clients. And you are here to talk about the stock market today. Sorry about the noise up there. Perfect timing. Oh, it works. Yeah, summertime, right? So we got thunderstorms coming. Actually watched the lightning bolt hit this post across the street a minute ago, and then smoke came out of it. It scared me to death. So I'm not wearing pants today, but that's okay. Let's talk about the stock market here today, because we are one of the only advisors that can actually talk about it and teach you. And since it's a lighter day, we're going to do something a little bit different. We're going to talk about options and go through some studies that I guarantee you've never seen before. Anyways, if you look at the S&P, last week lost about 2%, gains about half of that back. Excuse me. Gains about half of that back here today. 1.08, 1.1, depending on the after hours here. So what happened? We're a nice little pullback inside of this uptrend, and all of a sudden you have the dip buyers, right? People that go, hey, you know, that's good enough. I'd like to do that there, so that's just fine there. Earnings season on a Monday is typically pretty light, right? And sorry about the rain, it's getting louder. Is pretty light. So I thought on a Monday we'd actually like focus on some other things if we could. And one of the fun things I was doing over the weekend was look to see the shift to small caps, right? So I was trying to see, like, in the S&P 500, you've got the large cap stocks, and then you have, of course, you work your way down to smaller cap stocks. The larger the value of the company, the more say it has, your Nvidia and Tesla and things like that. So anyways, take a look at this here. So here's the S&P. This is the year-to-date performance. Yeah, it looks good. So year-to-date performance, but then instead of doing all 500 stocks just randomly, over on the left, this is the performance of the largest, your Apple, Nvidia, right? The biggest companies, your trillion-dollar names, year-to-date performance. And then as you work your way towards the bottom here, you get into the smaller companies that are at the bottom of the S&P, still in the S&P 500, but they're there. So what are we looking for here? Just kind of blur your eyes a little bit and tell me, is there more red here, smaller cap stocks, or is there more red over here? No, this is where all the action's been, right? Everybody wants to be in the big names, all in that larger caps area. You've got some outperformers that just had amazing earnings, right? That's really helped out there. But all in all, the money is focused over here. If you're not an index investor, you're over here. Well, let's look at the last 10 days, shall we? See any difference? Well, there was red over here. Now look, all the money is shifting down towards the lower end of the spectrum, and we talked about that last week because of interest rates and the projected interest rate cuts as we go forward. So we can now use that as a way to say, well, it's not just the Russell 2000, it's the smaller cap stocks in the S&P that have had the better performance in the short term, really short term here, but that's what's helped kind of stave off some of that pullback in the stock market. Now we talked about that before, or last week, that if we had just a 3% pullback in the three biggest names, which I believe we had, that would translate, if that money went to the Russell 2000, that would translate to a 10% rally in the Russell 2000. And that's just because the amount of money, given the market cap change for those stocks. So I thought that was pretty cool, something to share with you that maybe you've never seen before. If you look at the NASDAQ, that brings you all the way back down to the 50-day moving average. Remember, that's a rubber band. It's not a solid line. I mean, right now, people are treating it as a solid line, but moving averages are just a visual indication of a range of areas where people were willing to pay or were willing to start selling. Loses about 4% last week. That was one of your bigger decliners. I believe it was the biggest decliner, actually. And gets about half of that back today. No, not quite, right? It only gained about 1.5%. So it did okay, right? It's fine. If you look at the Russell 2000, well, there's your excitement, right? That's the rally we talked about. The Russell 2000 last week was the most overbought that it had ever been in history, right? Historical event that maybe you got to say you were a part of, right? Hey, Cody, you know, is it Bruce Baumgartner? yesterday, was it Bruce Baumgartner Day? You don't know what that is? Okay, so shoot, I was like 2. In the 80s, McDonald's, they were like, hey, we're going to do a thing for the Olympics. Oh boy. We're still here. They said, we're going to do a thing for the Olympics. If Americans win a gold medal, you'll get a Big Mac. If they win a silver medal, you get fries. And if they win bronze, they got a Coke, right? But what happened was you'd go to McDonald's if they won and you get a little peel, what do you call it, a little scratcher kind of a ticket thing. And it had to be the event. So for example, if it was like swimming and you scratched off swimming, then you got a Big Mac or whatever, right? If they got a gold. Well, anyways, McDonald's was pretty smart. So what they did is they said, well, let's only pick the sports where like Americans don't win. So it was like wrestling and stuff. So anyways, people were like, okay, I'm gonna get a Big Mac. Well, right before the Olympics, the Russians boycotted the Olympics. We're not going. So it was like, uh-oh. And then the Europeans after that, they boycotted the Olympics as well. And so all of a sudden, the American wrestler had a chance. And I believe it was Bruce Baumgartner won the gold medal for wrestling. Well, McDonald's chose wrestling for all the little scratchers. And so all of a sudden, they were going to get, all ripped off here. So there was this kid that collected a bunch of them, and he went and got his Big Macs and stuff. So anyways, it was a historical kind of event that stuck in my head. I don't know why I started talking about that. I'm sorry. But if anybody's like a child of the 80s, is it Bruce Baumgartner? Or I can't remember if that was his name, but it was Baumgartner something. It was Bruce Baumgartner Day. Kind of like Bobby Bonilla Day, but not as interesting. Anyways, moving on here. So where did it get stuck? Hey, the Russell 2000. Okay, got a big rally here today. Last week, gains 1.75%, best performing index for the month so far. Of course, everybody wants to be in small caps there. Here's something interesting. Consecutive days higher. We had 5 consecutive days of 1% gains or more in the Russell 2000. That's not normal. You could see the prior record in 2020 was 6 days, 2000, 6 days. Basically what I did is use that to pull a bunch of data and go, well, when that happens, if it's up 5 days in a row or 6 days in a row, does that mean it tends to do well going forward, or does it tend to be do poor? It's a 50-50 shot. So I don't really have an extra chart for you there something to show you. Semiconductors, all the focus, right? So everybody's excited about the old semiconductors. They want to be a part of it there. I don't blame them, I guess, in some degree. Today, NVIDIA led the way there. If you look around the semiconductors, Broadcom and all the rest, yeah, they did good. So, they fell 10%. If you look at the semiconductor index there, the semiconductors fell 10%. I said, well, let's go and look and see, right? So here's the constituents of the semiconductors. You can hopefully see their names on yeah, that's good. All right, that's good. And you can look at this to determine, do you like the stocks that have pulled back the most, or do you like the stocks that held up the most, given all the weakness in the little sector industry here? So just wanted to share that with you. You got Skyworks holding up yeah, we're good. All the way down to Lam Research, AMAT, the big names, AMD, Micron, Clack, NVIDIA, etc., right? They all had the biggest pullbacks. So if you like that sort of thing, the average stock down 6.5%, the industry down 10%, and obviously some stocks are down a little bit more than others. It's not a recommendation. It's just a way for you to go, you know what? I like the real weak stuff. I believe in the weak stuff. Or I've been waiting to buy some AMD or Micron or whatever it is. Okay, I want to buy that. Gives you something to look at there. All right, one more thing. We'll do the stocks in the news. Are you into selling covered calls? Selling short puts, selling short call. I don't know, whatever you want to do, naked calls. I like to track the outperformance of using options, right? They say, oh, you can't beat the index. Well, yeah, you can. It's with using options, of course, if you want to do it, you can. However, there's a million directions to go. So I got a lot of questions. Everybody that we met in Texas, I said, hey, what could we do better? Right? I've heard your story. We talked for a while. We have a drink. It's all good. Now you're nice and loose. What could we do better? I want to know. So options were a big conversation point, earnings as well, and feel free to tell me if there's something else. All right, so I shared this with you guys before. We're looking at the outperformance of just investing in the S&P if you chose different option strategies. I'm not saying you have to, we're looking at data, right? So naturally, in a strong market, a trending and very boringly trending stock market, if that's a word, selling puts is going to be more it's going to outperform because you were never tested, right? You never really probably saw weakness. So we sell a 10% out of the money put. In other words, if the stock is $100, you go to the $90 strike price and you sell that, right? Just blindly do it. You can see that the outperformance is in dark blue by using the puts there. That is the outperformance of doing that versus just owning the stock market. It's not a whole lot there, it just adds a little bit to the pie. Well, we have a problem. You know, if you do this, and if you ever used or sold calls, covered calls, whatever you've done, you have likely done this and been trapped because of earnings, right? The little earnings come along and there's a 10% move in a different direction. You didn't see it coming. Oh my God, CrowdStrike. You see what's happening there? You didn't see it coming. And they have earnings coming up. So we say, well, what does it look like if you did these things, but you avoided earnings? Because those are big moves. So you think like if you're not a part of that, then you may not outperform. So we looked at that, went all the way back and say, okay, if we sell covered calls, we got to pick a strategy. If we sell covered calls during earnings season, without earnings season, so skip all the stocks that will have earnings inside of the expiration that you will have, and then we say, to hell with it. Let's just do covered calls broadly and not worry whether it is, they're going to have earnings or not, right? So take a look at this. It looks a little messy, but hang with me for a second. The blue is how much you outperform or underperform the market, okay? And this goes back as far as I could. Late 95 is where we got this. And so generally, you are outperforming. There are times, right, where you're not, and that's because you missed that move, right? You're not selling that covered call on a stock that just, moved against you, right? So that's all that's showing there. It's not that you're like losing, you're just not outperforming. So this isn't a loss, this is the outperformance. So anyways, over time you can see that you're actually more, you're better off by skipping the earnings. It's not by much, but if you don't like that and that stresses you out about being around these stocks and Tesla is going to report tomorrow, I don't know what's going to happen. The expected moves are like plus or minus like 11%, I think last time I looked. So it's just another way to take a look at it. And if you like that, we're going to expand on it, right? And we'll put more of that into the show because I get a lot of questions about that. I'm not really sure where you guys land, but it is what it is. All right, a couple stocks in the news, and it is fully on downpouring here, so apologies if it sounds like static. That is not static. It's just we literally in a warehouse doing this, so it is quite loud. If you've been watching for a while, you know that's part of the drill. Bank of America. Berkshire Hathaway, the old Buffett team there, says sold about $1.5 billion there. I believe it was quite a profitable position for them. Boeing is all over the place trying to rebuild credibility again there. They've increased their sort of like, hey, we think we're going to be able to build more planes safely and actually kick out more of these. Ryanair had their earnings overnight and actually confirmed that they're seeing better deliveries, so that goes along with that. Verizon comes out with earnings here. It was a miss on like their wireless subscribers, but broadband was where the action was. And by the way, their margins are going up. So overall it was a miss, but if you like a company with, really slowly increasing profit margins, then you might like the fact that that fell today. And then lastly, just Pulte Homes. Pulte Homes losing their one of them, the CFO, I think. So not a big deal there. That stock already on the run. Again, these smaller cap stocks that are more interest rate sensitive, obviously, they're the ones getting all the action there. I'll take your questions if you have any. Otherwise, tomorrow we have General Electric, General Motors, Coca-Cola, Lockheed Martin, Philip Morris, Pacer, by the way, that's your Peterbilt company there, Sherwin-Williams, UPS, Tesla, of course, and Alphabet after the close. So if you turn on the TV tomorrow after the close, that's pretty much all you're going to see there. Anyways, you got what you got. And then Biden, right, with the thing this weekend here. Actually, surprisingly, you can quantify that market-wise. It's not a big difference there between Biden and Kamala Harris. So we'll see. We'll maybe make it a little louder for you, huh? Is that what you want? Doesn't matter. It's just bad. The rain's kicking our butt here today, right? I know. There's not much we can do about that. Mortgage, no, just trying to be helpful. Keep up the great. Oh, thank you. The volume thing. Yeah. Just, hey, we could have not done the show. And if it rained, you have a rain out day? No, it's fine, right? Mortgage delinquencies, 6-month high in June, yes, but still historically incredibly low. So although we're ticking, not enough to scare anybody. You know what I mean? Compare, just go do like a 10-year average and look at that. That's why you don't see that as, doom and gloom. CNBC special report. That's kind of that. Do we know who won the previous Guess the Dows? We're looking into it, and then tomorrow we'll do an update tomorrow because we'll have Kevin back. That's what we need. A little bit of a summer break on that one there. Did Biden not running with Harris look like the nominee affect the market? Yeah, that's what I was mentioning a second ago. All the analyst stuff that I read today, they don't care. They're just trying to figure out what the market's going to do. I'm sure they have their personal opinions, but I like looking at analysts' sort of commentary and studies because they're really just giving you hey, this is what's happening. And not much change between Biden and Harris. And I think a lot of that is because from what I was reading, Kamala Harris, what team is she going to use? What political committee? How's she going to get this all set up? It's just the Biden people shifting over to Harris. And I think a lot of people think, all right, well, that means she's not going to be able to really make her own mark if she becomes the president. So for the moment, that's where it stands. Now, that will change. She will come out with her policies and ideas and things. I imagine she might have her website updated and all that. That'll give us a better glimpse into how far away from Biden's plan she was going to try to go. Buckle up. All right, I'm going to wrap it up there. I do apologize for the noise. It is Florida in the summer, and that does happen here. So we'll get out of your way. Enjoy the rest of your day or evening, and we will see you tomorrow.